Why telecom major VI will not become a government company now? How will VI's arrangement on the interest to equity scheme with the government work? How does this ensure that VI will not become a government run company now? The government clarified on Wednesday that it was not interested in holding any board position in any of the three telecom service providers that had opted for the interest to equity scheme. Of the three companies, the largest VI, formerly Vodafone Idea, which will allocate 35.8% shares to the government on a preferential basis. These shares will be allocated to the government through specified undertakings of the Unit Trust of India. The company's chief executive officer and managing director Ravindra Thakur had said on Wednesday. How will VI's arrangement on the interest to equity scheme with the government work? VI, which is reeling under debt in excess of 2 lakh crore, will offer the shares on a preferential basis to the government. It will be a non-cash transaction wherein the debt that was owed to the Department of Telecommunication will simply be turned into equity. At a virtual press conference on Wednesday, Tucker said the company has opted to convert the interest on all deferred payments to equity as it gave the company a chance to clean its books. Since the company had a significant debt as well as stretched balance sheet, the interest to equity scheme would give a VI a chance to put aside more funds for investing in newer technologies. The company chose to make us this scheme right now instead of later as the deadline for opting for the moratorium and the equity conversion was ending on Tuesday, Tucker said. How does this ensure that VI will not become a government-run company now? After the completion of the deal, the government will become the largest stakeholder with 35.8% stake, and the current promoters Vodafone Group and Aditya Birla Group will see their holdings reduced to 28.5% and 17.8% respectively. This, however, will not mean a change in board position. By another resolution, the current promoters have also agreed to amend the shareholder agreement and have brought down the minimum qualifying shareholding threshold from 21% to 13%. This means that both Vodafone Group and Aditya Birla Group will continue to hold rights to make important decisions about the company, such as the appointment of directors and other key officials, among others. Also, the government itself has clarified that it would not take any board seats or appoint any executives to the boards of VI. Will it be easier for VI to survive the competitive telecommunications market now? Since a large part of debt VI owed the government has been converted to equity and handed back to the DOT itself, VI will have much cleaner books now. This in turn will make it easier for the company to raise funds from global as well as domestic investors. The fact that government is now also the single largest shareholder in the company will enhance VI's chances of raising funds from new as well as old investors. That said, most industry experts and analysts believe the company will have to look for avenues to increase its average revenue per user from the current rupees 109 to somewhere in the vicinity of rupees 300 to be able to sustain the long run. The key question remains VIL's Vodafone Idea Limited ability to raise equity in the near term to meet cash flow needs over the next 2 to 3 years. We believe substantial improvement in operating performance is key to VIL to come out of the precarious situation, and we may not be seen enough evidence for sustained operational improvement, Credit Suisse says in a note on Tuesday. On Wednesday, Tucker reiterated that the company was in talks with several investors from across the world and there should be some news of infusion of funds in the coming months. What was the government's offer on conversion of pending interest and dues to equity? In the telecom reforms approved by the Union Cabinet in September last year, one of the major decisions that was aimed at providing immediate relief to debt-laden companies such as Vodafone Idea was the decision to provide a 4-year moratorium on payment of all dues arising due to the Supreme Court September 1, 2020 judgment on adjusted gross revenue. This meant that telecom companies could opt to pay the principal, the interest and all other penalties as decided by the top court after 4 years instead of having to pay up immediately. The government had then also given all the telecos a one-time opportunity to convert the interest on the deferred payment into equity at the end of the 4-year period. VI, which is reeling under debt in excess for 2 lakh crore, has been looking to raise funds from investors for quite some time. The government's offer of deferred payment of adjusted gross revenue dues came as a major breather for VI, which owned the Department of Telecommunication more than 58,000 crores just as AGR. Thank you.